Hello and thank you for joining me. I'm here in Toronto for the PDAC Gold and Silver Mining Conference. Today was the first day of the conference. On Sunday, I'll be here for a few more days. We're going to get updated on the action in gold and silver after the strong moves that we had Thursday and Friday. So we'll take a look at the charts and then we'll have some more commentary coming on later in the week on some of my observations here from the PDAC. Okay, so we are back, and looking at gold over the last couple days, we had a really nice move on Thursday, breaking out of that consolidation that I had been bringing to your attention for the better part of the last several weeks. This will make more sense when we look at the 6-month time frame, but there was the break, and then a bit of a back and forth day on Friday, hitting up to 1280. I would have liked to see a little bit more follow through on Friday, so I'm going to try to do my best to put this into perspective. Look at the 6-month time frame now. Looking at the GLD fund, and we were looking at this sort of a triangular consolidation. I was originally thinking this consolidation was going to last for a few months. It only lasted for about 1 month. And even less, about 3 weeks here, and before breaking to the upside. Now, typically when we have a consolidation like this, we can derive a measured target higher from the amplitude of the widest part of the consolidation. So what am I talking about here? We're talking about this stretch right here, which was about a $60 drop once it first broke above 1190. The price of gold had got to about 1260 before dropping back down to right around 1190. Let's call that a $70 amplitude. So we have broken through that. Now we're forming something like a short-term uptrend here, much more gently sloping, which is nice to see compared to this uptrend. So let me show you exactly what I mean here on the real numbers for the price of gold. Breaking out of this consolidation pattern, we were looking at this amplitude being roughly 1260 to 1190. A $70 amplitude, which generally can be added on to the breakout point. The breakout point from this consolidation was somewhere in this 1230 range. So that gives me a target of 1300 for this break higher at some point in the very near future. So this 1300 level would correspond with this high as well. So it's also a recent high. It's also a psychologically round number, and markets tend to often respect these numbers for no other reason than they're round numbers. So we have a target of 1300. Now here's the tricky part. The price hit 1280 on Friday before backing off. Coincidentally, the mining sector gave us what looks like a short-term topping signal. So sometimes these measured moves do not reach the absolute target. We were strongly indicating that we would break higher. That break higher only lasted 1 day. So my instinct, based on studying this market for a number of years, is that a break from that consolidation is going to last more than 1 day, and possibly come back down for a couple days before resuming some sort of an uptrend toward 1300. Now, could this break have faltered at 1280 and not reached the 1300 target? Absolutely. So we're in a point now where the short-term predictions are going to become much more difficult, if you can't tell. Lows are much easier to identify than short-term continuation moves after you have a consolidation break like this. So we're at a point right now where we have to step back and identify what we can see, which is there is a significant break of this primary downtrend that we've seen for the better part of the last 3 years. We had that break in January and February. We consolidated and have moved higher. So we're looking at this as a bottoming process. Short term, we are really going to need to step back and let the market show us. For example, when we hit 1300 here, which is what I'm expecting over the next week or so, we are setting up for the possibility of needing to have a correction of this primary move higher. So that correction could, for example, come from 1300 all the way back to 1200. And that would be a little bit of a scary correction for people who are just getting interested in the market now, because they would be buying here and then the market would move against them. And that's kind of how those corrections form. From the psychological standpoint, they look to scare people that were not paying attention in the lows and that only became interested here at the recent highs. So I don't know that correction is coming today or tomorrow or this week. I have a target of 1300 for the price of gold. The closer we get to that, we will then reassess and see what sort of strength lies. We do have a confirmed break of the downtrend, however. Let us not lose sight of that. Turning our attention towards silver. Silver, interestingly, outperformed gold on Friday, right? Here was the move on Thursday. And then on Friday, silver continued to power higher, whereas gold had come back down into its Thursday range. So this is an interesting little shift. Even just on a 1 to 2 day basis, silver showing a little bit of strength. Looking at this from the 1.5 year time horizon, guys, you are watching textbook technical analysis right in front of your eyes right now. The silver market is responding so technically perfect, I couldn't even ask for a better situation than this. This is the kind of thing that you will be able to study, and if you really are interested in this form of analysis, you'll be able to apply these lessons to other markets and to the silver market in years to come. We broke out of this line here that had been holding the price of silver back for several years. And notice it was an initial break higher, and look at that retest coming right back to the line before accelerating higher here over the last couple of days. And as I've said, the price of silver does not need to skyrocket right now. All it needs to do is continue to even consolidate or move marginally higher and distance itself from this line. The farther that silver can distance itself from this former downtrend line, the more valid this break, and the better we are setting up for silver over the long run. So very healthy if we should see silver continue to consolidate or perhaps even move up to 1625 before backing off at some point during the summer. Very, very good action. There's been concern about the gold to silver ratio, and I covered this a couple weeks ago, but I just wanted to update it. Just going right to the 35-year view. Now, we had that spike higher a couple of days ago before falling back to close right around 81 on Friday. That little bit of strength that silver showed, bringing the ratio back to 81 from 85 a couple of days before. So we're still relatively high, yes, absolutely. But here's how I think this ratio is setting up. Now, first of all, let's keep in mind that at most other precious metals peaks that we have observed throughout history, the gold to silver ratio tends to reach somewhere in that 15-to-1 ratio. 1980, it hit somewhere around 17-to-1. And we're currently at 81-to-1. So we're nowhere near a top. The previous top in silver in 2011 hit right near 30. So that was a temporary top in the precious metals, but I don't believe that is the final high. So what's setting up here is we can see these multi-year uptrends amidst what is a generational downtrend, basically from the year 1990 when this ratio hit 105. Now, looking at the action here since the year 1999, this is very interesting. This looks to me like a head and shoulders pattern that is setting up across this multi-decade time frame. Yes, it's a bit sloppy here. This spike lower in the ratio kind of makes that head and shoulders pattern that we're talking about look a little funny, but we're talking about a shoulder, a head, and a shoulder. This high corresponding very nicely with this high from 2003. So these patterns don't have to look perfect. We're looking for the message of the market. And this fits in with my expectation that at some point in the next year, perhaps even the next 6 months, we are going to see this uptrend broken and silver start to outperform gold. We may have already seen the top. This spike higher looks very much like this spike higher back from 2008. A temporary spike higher for a couple days before quickly reversing. So we saw something like that on Thursday of this week. So it could be right now, it could be at some point in the next few months, in the remainder of this year, but it looks very much like we are setting up for a head and shoulders topping pattern in favor of silver. The measured target of that topping pattern would take us somewhere below 15 to 1 at some point in the next 10 years. That is what the technical action is showing me. So I hope this helps to ease some of the fears. Silver will not underperform forever. Mark my words. And as a contrarian, you want to be looking at the metal that is the best value. There are absolutely reasons to own both metals. Throughout history, we can see that. Gold may continue to outperform, but we do have to admit that this ratio is at a level right now that is in favor of silver outperforming over the next several years. Thank you for watching again. We'll have another update in the next couple of days on Wednesday evening, and perhaps some more commentary and observations from the PDAC. Have a nice Sunday evening.